Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc. LME 3-month nickel. Not really much report from last week's commentary other than early last week prices dipped down to make a new low and low close, not seen since early September last year. Going now once again to the big picture. 19 weeks ago, yes, 19 weeks ago, I said about this market, and I quote, "This leaves us with an interesting if complex situation. You see, one could look at the whole of the early November to date action as a possible complex head and shoulders top with a split head. It all now depend on whether the market first makes a move down to the proposed neckline of this pattern, which is currently at 31,510, and highlighted in dark blue, and then what it does when it gets there." End of quote. That was fair enough. I'd seen a potential head and shoulders top, and I'd highlighted all very, very sound analysis, and I'll expand on this in my commentary in a short while. Since then, the market has maintained bearish pressure, with prices falling. However, upon approach to the February 2014 high at 22,155, and the associated congestion seen throughout the middle and latter part of 2022 at that and nearby levels, the market started to slow its decline and even recover. Yet the recovery was limited in mid-April by in part the August 2011 high at 25,195, but also in part by the overhead and now declining medium moving average, currently 24,615. These reactionary moves higher set up the market for the latest move lower for new bearish Andrews pitchfork, which I will cover shortly. And going back to the head and shoulders top pattern. Now, as I said earlier, I would expand on the further potentials below for the head and shoulders top formed since November last year. I said the following 7 weeks ago, and I quote, "We've had that confirmation of the move below the neckline. Thus, with the previous numbers in hand, we have a primary target of this less acute head and shoulders top in the 24,070 zone, with a secondary, harder to reach target X2 down in the 20,540 zone." End of quote. The primary target was reached 11 weeks ago, and target X2, well, that was finally reached last Wednesday. This brings me to my final pattern, the previously mentioned early February to mid-April bearish shift pitchfork, which I've highlighted in bright red on my daily chart. Had a small breach of the upper time, currently at 23,330, but this was quickly repaired. And the market has been now congregating around the middle time for some time now, and that's currently at 20,695. This bearish pitchfork continues to show the current bearish angle of attack, so keep a close eye on the tines as they head lower. That is the upper, the middle, and also the lower tine, currently at 18,060. The thing to watch out below is a little distant, but it's there, and that is the congestion between 17,815 and 18,850, consisting of the August 2019 high at 18,850, the June 21 high down at 18,110, the important July 22 low down at 18,230, and the October 2019 high at 17,815. Last week's outside week does not seem to have either helped nor afflicted this market. LME 3-month zinc. The market has moved sideways this past week, but overall it still likes the recently constructed bear channel. Now, going back a bit, the key recent event here was back in early April, when prices which had earlier penetrated but not really broken down through the lower time, currently 30.08, of the big old 2015 to 2020 bullish Andrews pitchfork, highlighted on my daily chart in bright red, well, they finally broke down through the lower time. Primarily, I suspect, because the middle time, currently at 26.41, of the more recent late May to mid-August 2022 bearish shift pitchfork, the one highlighted in purple on my daily chart, this was driving the market lower. At the same time, we saw the establishment of the 2023 downtrend, currently at 25.28, which is highlighted in dark blue on my daily chart. This is still a valid downtrend, and it has also led to the construction of the recent lower bear channel line, currently at 21.33, 21.33 even, which is also highlighted in dark blue on my daily chart. Thus, the picture is clearing up, with the market moving down within the dark blue April to date bear channel, which in turn is moving down within the purple May to August 2022 bearish shift pitchfork. To add to this, I have over many weeks spoken a lot about the March 2020 to June 2022 ascending expanding wedge pattern. This is way up off the top of my daily chart. I've given in the past some outlandish potential targets for such a long-dated and wide pattern. The primary outlandish target for such a pattern was in the 25-45 zone. This was achieved 3 weeks ago. I said last week, or laid out last week, the potential secondary target X1 for this pattern. This was a far harder to reach target, and it'll be quite a way lower down in the 13-45 zone. This is one to definitely put in the back of your diary and only look at occasionally. In the meantime, a more immediate support below has been the October 2020 low at 22.82, which has been breached. But there is an argument that it barely had a second consecutive close below it, and we therefore might consider it breached rather than broken. This ties in with the previous week's penetration and breach of the lower bear channel line. It wasn't enough to verify it, and prices pulled higher much as they did last week. Question now is whether this will just be a tickle of the lower bear channel line and the October 2020 low, or the first of perhaps a number of attempts to break down through it and resume the decline. Just in case, below the October 2020 low, we have some congestion dating from July 2020 between 21.86 and 21.56, but nothing to note below these until the lower bull channel line and the lower time in purple.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.